This year, Canadians has been on a buying spree, snapping up U.S. Securities at a pace not seen in decades. Based on National Bank's data, Canadians' net purchase of U.S. issued equity reached 59.9 billion Canadian dollars in the first half of 2025. It's actually the highest on record, dating back to 1990. So why are Canadians buying U.S. equities now in the middle of a trade clash? That's what we are going to discuss. Out of the $59.9 billion, $48.8 billion went into U.S. issued equities and funds, and $19.4 billion went into U.S. issued bonds, which includes private bonds and treasury bonds, and $0.8 billion went into U.S. issued money market fund. In the meanwhile, foreign investors has pulled back from Canada this year with a net outflow of $18 billion in the first half. It's actually the worst first half on record since 1990. Well, to understand this, we need to first compare the indices, their performances. So the U.S. S&P 500 in this chart is blue, covers the top 500 U.S. companies in terms of market cap, while the Canada's counterpart is S&P TSX Composite, which is represented in a purple line. It represents around 70% of Canada's total market cap, includes 230 Canadian firms. So it's very different than the tech-heavy S&P 500 index in America. The TSX leans heavily on financials, energy, and materials. So far this year, beginning the first day of 2025 until August 31st, we can see TSX is actually up 14.7% year to date. It's doing a better job than the American S&P 500 at 10.08% gain. However, if we zoom out a little bit over a 3-year horizon, the American stock is beating the Canadian one by a lot. S&P 500 is up 75%, while the Canadian TSX is only up 55%. And if we stretch it to even a longer horizon, to a 10-year horizon, the gap is even larger. The S&P 500 is up 211%, almost twice the gain of TSX, 112%. So long-term speaking, the U.S. Market pretty much consistently outperforms Canada by a wide margin. So besides the long-term excellent return, what else makes a U.S. stock market so attractive to Canadians? The U.S. stock market stands out because it's where the excitement around AI and big tech is happening. So far more than Canada, right? Investors want exposures to giant companies like Nvidia, now worth $4.28 trillion. Investors want exposure to Microsoft, worth $3.7 trillion. So that's where the excitement comes from. And we read the news, the headlines are always talking about AI, robotics, and that's where people want to put their money in. So there is clearly a element of FOMO for Canadian investors, right? Fear of missing out. So Canadian investors, just like the American investors, they want to chase the winners. And it's also important to understand the underlying sectors within each index. So in S&P 500, the number one, the heaviest sector is technology. It's 34% of the index. So the next sector is financial, followed by consumer discretionaries, like your Nikes, your Starbucks, and then followed by communications like your Meta, Google, right, and then followed by healthcare. And then we have industrials. But if you look at the Canadian TSX, it's very different. TSX have number one sector is financial, is 31% of the index. making the index heavily bank and insurance company driven. The next sector we have energy, and then we have materials and industrials, and then we get into infotech or the technology sector. But the Canadian technology sector is not even close to what America have. And the biggest tech name in Canada is Shopify. Essentially, to me, it's an e-commerce website builder. It has a very small moat, and that's why I think many investors they look south. They look for American stuff because they're looking for U.S. stock exposures for both the diversification and a chance to tap into the growth of the large cap technology stocks. Another angle to look at this is to look at the exchange rate, the currencies. So this chart shows you the U.S. dollar to Canadian dollar exchange rate. So in 2024, right? This is 2024, and then we have 2025. In the late 2024, right? U.S. dollar was going stronger because in the middle of 2024, one U.S. dollar equals 1.37 Canadian, but by the end of 2024, it's like 1.46 Canadian, right? So U.S. dollar was stronger going into 2025, but then U.S. dollar weakened, right? Starting 2025 year to date, it's going weaker compared to Canadian dollar because of Trump's tariff policy causing U.S. dollar to weaken. So the weaker U.S. dollar compared to Canadian dollar will make it cheaper for Canadian investors to buy American stuff. Okay, so that's what's boosting the Canadian investment into American stocks. And also, Canadian people want to hold some U.S. assets to diversify their currency risks. So even though overall there are waves of anti-U.S. sentiment in Canada right now due to the tariff, because we saw the Q2 2025 Canadian GDP was crap because of tariff. But Canadian investors keep on piling into the U.S. market. So for Canadian investors, they don't really care about politics that much. What they care more is opportunity, right? Because in the end, for investors, it's the chance to make money that speaks louder than anything else. Thank you. Please like and subscribe.